Let's talk about another stock that is on the rise today. That is Southwest Airlines. The company reported earnings for the third quarter that beat estimates on the bottom line as the airline posted load factor numbers higher than pre-pandemic. This is what we've been hearing from some of the airlines here as we see strong demand for travel and revenue basically in line with estimates here. The company says Hurricane Ian cut its revenue by $18 million in the third quarter and is still going to have an effect in the fourth of $10 million as well. And also, it's looking still at costs that are at relatively elevated levels here, Bob.
Yeah, fuel expenses continue to remain high, and this is something that we've heard as a kind of through point, or at least a common denominator in many of the airlines' earnings. And a larger question of course, when they start to bring some of the capacity back online. But I think with the comps that we've continued to see, there is that strong demand that pulls through to the comparables back to 2019, which was the last kind of pre-pandemic normalization year. They were up in comparison by about 13 to 17%, at least in their guidance and outlook. That's the expectation that they're looking in terms of going forward from here and into a busy holiday travel season.
Yeah, Brad, sure looked like they had a lot of momentum exiting September, or another way of looking at it, entering October. Total liquidity, another airline sitting on a lot more liquidity compared to the depths of the financial crisis, almost $15 billion, well in excess of their total debt of about $8.7 billion. That's certainly good as well. But I think as we step back, we've now gotten all the results from the major airlines. JetBlue, we just talked about them, probably the worst quarter out of that whole group.
It was a bad quarter for JetBlue. And I mean, when you think about how much they were paying more for gas and fuel, I should say, I think that was about 83% higher, or 87% higher rather, for fuel. And that really weighed on some of the margins there too. But for Southwest, for American, for Delta, and United, those had been relatively strong on the better demand that we had seen. And so it's just now a question of how much they continue to invest in bringing that capacity up to scale. And honestly, if they do that anytime soon, I mean, if you're already seeing this type of demand on reduced routes, and that's going to help you manage some of the interim costs while you're waiting to bring more pilots back online, the average kind of throughput for that, or at least bringing those pilots into the system, it could take as much as a year and a half, 2 years. So it's going to be a cost management cycle here for the companies as well.
Yeah, and it's not just, to your point, it's not just about fuel. It's about personnel is a big part of that cost structure too.
Absolutely.